Good morning, trading world. It is May 30th, 2023, 8:30 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. It is officially summer for me, but does the rest of the market feel that way? Hoping everyone had a happy Memorial Day weekend. For me at this point, it is officially summer, and my screen time and trade time usually decrease a lot, giving me time to focus on other endeavors. One of those endeavors will be the release of my first trading guide, The Ultimate Guide to Trading Range Days. I know you all hear me and see I speak a lot about differentiating the different trading day types. And so this is going to be the first step into explaining a lot that goes in behind that and what to look for so that you know what day type you are trading and how to trade that particular day type. I usually like to disappear during the summer, but this year feels different. I don't think the volatility is going to completely go away, making for some interesting trading at times this summer. I will step back this summer, but I will put on a few more VIX volatility spreads soon to keep watch over through the summer, just in case of a spike in VIX. I am kind of expecting short, stubby, orderly candles to continue to climb up that are occasionally going to be interrupted by long red candles. Now, the weekly outlook for the SPY is bullish, closing above the 420.02 with an expected retrace of around 415. We have dissonance on the weekly between the technical side, which is bearish, and the quant side, which is bullish. That brings me to the key levels of the day. Let me bring those up. All right, here we are with the key levels of the day. Starting at the resistance side, we have our jack resistance at the 422 area. We have our queen resistance at the 423 to 424 area, and then our king resistance at the 425 to the 426 area. On the support side of things, we have our jack support at the 421 area, queen support at the 420 to 419 area, and then king support 418 to the 416 area. The main thesis for today is bullish, closing above the 420.02 with a projected target high of between 420 and 426. The alternate thesis is bearish, closing below the 420.02 with a projected target low of between 419 and 417. The main channel we are in is between 416 and 425. Last week, market strength and breadth opened gap up and paused briefly before rocketing up, then rolling downhill a bit into a range-bound afternoon that still threatened to push higher on the day. I expect strength to open strong and at some point beginning to level out ahead of a pullback coming through the middle of the week. We have dissonance between the technical side, which is bearish, and the quant side, which is bullish. But we also have a gap in order flow that could keep this thing pushing up, ignoring intraday indicators. The futures have a bearish bias for the day with harmony between the technical side which is bearish and the quant side which is bearish. However, my futures calculations are probably thrown off by the holiday weekend since they did open briefly since Friday. This brings us to the scenarios of the day. Alright, here we go with our first scenario and most probable of the day, which is going to be our trend day up, meaning we open gap up and start with a push back toward the previous close. We find support on or before the previous close, then begin the uptrend for the day. We usually find midday chop around either the possible queen or king resistance area. Another thing to watch for, or key to watch for today, is for a big risk of a failed trend day where we push down from a target, and I believe that target for today is going to be the 424 area. It doesn't have to happen, but just be aware that it could happen. But on normal trend days, we usually come out the second part of the day looking to continue the primary trend of the day, which would be up. And at some point, it turns into a head fake, in which going into or somewhere toward the closing, we get a fade. So that's the workings of a normal trend day. All right, here we are with our second scenario, which is going to be our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area, find midday chop around either the queen or king support before going back up with the same energy or force we went down with the first part of the day. Again, this is our rounded reversal day type structure. All right, last but not least, we have our expanded range day structure. We could get a pop pre-market or early in the session into rejection from that resistance, experience some consolidation as we try to get it together for another push up, but end up making a half-hearted push back down that resets and restarts in the next session. Again, that is our expanded range day structure. As I always say, your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risks that we have on in each position and managing that risk in accordance to our account size. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.